Good afternoon, esteemed participants from all around the globe. I welcome you to our webinar on Deep Dive into GRI Standard, organized by the Sustainability Reporting Standard Board. We are privileged to host this webinar today. So in today's session, we will explore how the GRI Standard can help the organization measure, report, and manage their sustainability impact. With growing emphasis on transparency and accountability, understanding these standards is more important than ever. So we will walk you through the core principles of the GRI framework, discuss some of the best practices, and unpack some common challenges that organizations face while implementing these standards. We will also share some real life example to help you connect the dots between the theory as well as the practice. I would also like to welcome our event moderator, CA Rupal Haria ma'am, as well as CA Amit Doshi sir. And I would like to invite now CA Rupal Haria ma'am to introduce our speaker, Kaushik Mahadevan sir.
Thank you. Thank you so much. It's my privilege to introduce our today's esteemed speaker, Kaushik Mahadevan sir. Kaushik Mahadevan sir is a professional with over 2 decades of experience in ERP, accounting, pre-sales, and requirement analysis. A GRI certified sustainability professional backed with a postgraduate program in AI from the University of Texas. He holds dual qualifications as a chartered accountant and a cost accountant, and thereby combining financial expertise with a deep understanding of technology, strategy, and sustainability. I feel, and when I was reading and I was having a conversation before this program started, brief conversation, we would have no one else than Kaushik Mahadevan sir to explore and take us to deep dive in this today's topic, deep dive into GRI standards. Welcome, sir. Now over to you, sir.
Thank you so much, ma'am. Thank you so much, ICAI. It has been an absolute pleasure. I think we have been doing this series of, let's say, good initiatives in terms of, spreading awareness about this particular topic. And I commend, let's say, all the initiatives, that is actually coming out from your desk, as well as the entire team back at SRSB as well. Absolute pleasure, as I said. Let's get started. I'll quickly share my screen and then we get going on the topic for which we have assembled for. Yeah, let me know if you're able to see my screen. Thank you so much. I'll just enable the pointers. Yeah, so when we started doing this, when we, I think this is probably about fifth or sixth or maybe about seventh session that we are conducting jointly. Couple of them in person, and then and some of them which we are doing through, let's say, this online media. There are quite a few people who reached out. Some good inputs, some good pertinent inputs from people, and I believe even for today's session, when we announced that something like this is happening, some people did reach out and said that even before you touch upon, let's say, what GRI is, we would want to probably, as the topic very rightly speaks about demystifying sustainability, because unfortunately, the whole subject of sustainability has got this big baggage of, jargons, where people love, let's say, consuming jargons in their conversations. But I see that very few people really try and deep dive or, delve into, what exactly, let's say, each of these jargons actually mean. Yeah. Understanding GRI, in my opinion, is probably the easiest conversation. Probably, if you understand sustainability, if you understand ESG, if you understand what framework is, if you understand some of the terminologies associated with it, understanding GRI, in my opinion, is not more than, let's say, a 15-20 minute need or a requirement, right? So which is why I thought that, even before we get on to, let's say, the main topic of, let's say, what GRI is actually all about, I'll quickly touch upon, let's say, some of the basics of, let's say, what sustainability is, how different is it from ESG, what the landscape looks like at this point of time, what sort of jargons are we actually looking at, because some of the jargons, once we realistically demystify, then you speak about, let's say, any sort of a framework like GRI or BRSR for that matter, a lot of things actually become very easy because, again, everything is built on logic at the end of it, right? It's like, saying, today, if I have to file my income tax return, can I probably have a standard or a framework of my own? The answer is no, right? Because there is a very clear-cut framework. There is a guideline, which is devised or issued by somebody like the income tax department, right? They very clearly say that, individual to individual, whatever, let's say, be your ranking, whatever be your segmentation or the bracket in which you basically fall from a pay packet point of view, there is an element of standardization which is actually involved. So I can't just create my own Excel spreadsheet and say that, this is the income tax I'm actually allowed to pay for this particular fiscal or financial year, right? So a framework is no different than that. Yeah. So we'll come to that in a bit. I always love to, start these sessions, with some sort of, let's say, again, throwing jargons at people. Although I started off somewhere, you might find that, this is a little condescending, that, I'm challenging jargons, but at the same time, I'm also making a note of, some of the jargons like, greenwashing or blue washing. I'm in the past sessions, previous sessions, we have actually spoken about it, but I believe there are quite a few, let's say, people who haven't attended the earlier sessions, or they might be new to the topic itself. Yeah, so I'll probably quickly spend about a minute or two on this, and let's say a few minutes on, other ancillary prerequisites or the topics that I thought even before we can actually jump on to the main subject, which is GRI today, right? I'll take you back in time. This was in 2014, yeah, where globally, I mean, we started looking at, we started reading the tabloids, where Volkswagen was actually in the news. Yeah. Here is a company which is like, one of the reputed companies, worldwide. I mean, knowingly or unknowingly, what happened was they had actually launched a clean diesel vehicle uh, brand of vehicles from their stack. They ended up actually selling more than 500,000 vehicles, claiming that the vehicles don't emit, or the emission levels are far below than let's say the permissible limits by the environmental purists. But I believe post the sales, I think some of the environmental audits and let's say other assessments which got actually conducted, they were found to be on the other side, where again, knowingly or unknowingly, they realized that that wasn't the case. Turns out that they are the entire set of vehicles that they actually sold under this particular clean diesel vehicle campaign, they ended up emitting more than 40% of, let's say, the environment permissible limits. Yeah. And I believe they Volkswagen eventually had to shell out, I mean, billions of dollars, towards actually, paying fines, because it's a huge violation of sorts. It's like it's like misleading your consumers, and the consumers are the people, because of which, let's say, ventures or let's say any organization functions or runs at the end of it, right? That gave birth to a terminology called as greenwashing. Now, over a period of time, what greenwashing basically means is misleading, or let's say or conducting a deceptive marketing towards any of your initiatives with respect to environment. The word green obviously resonates with environment, correct? So greenwashing is anything to do with wrongly misreporting, half reporting, or not reporting anything about the environment aspect. Similarly, increasingly, there is this new terminology which has now come into let's say conversations, which is called as blue washing. Now, in emerged economies, both greenwashing as well as blue washing are considered to be an offense of sorts. There are legal fines. There are compensations which people are actually seeking for it. And blue washing is very loosely used towards, let's say, any misreporting, half reporting, or non-reporting towards social consciousness. Let's say that towards the people side of things. The term blue is also used very loosely with, let's say, the marine environment, or let's say anything to do with marine, right? Because the sea is blue at the end of it, right? So anything to do with, let's say, the marine industry, again, a half report, misreport, non-report is also considered to be a blue washing of sorts. All the names that you see on the screen, somewhere or the other, all of us, most of us, some of us would have definitely consumed, either one or all of these, or their products or product lines or services at some point of time. But unfortunately, I mean, because either there was no awareness, or if there was awareness, knowingly, this was actually done. And predominantly today, when you talk about sustainability or ESG, it is case studies like these, which gave birth to the whole context of, let's say ESG. Can organizations actually, keep on doing stuff misleading the consumers? The answer is no, right? So there has to be somebody who has to, let's say, govern these things and try to see that, how you bring a certain element of accountability, a certain element of transparency and honesty in the way, let's say, they are actually reporting on certain aspects about their functioning as a business. Yeah. Very quickly, the agenda for the day. I mean, obviously, broadly, we all understand, what exactly we are actually here for. I'll quickly touch upon a few aspects about ESG, the evolving landscaping measures here in India, as well as globally. We understand the GRI framework in a little bit deeper context. I would also like to circle it back to, let's say, how that is applicable in a country like India, where, let's say, BRSR is actually becoming a little more prevalent and a little more stronger, if I can say that. How do you implement GRI in practice? We touch upon some of the case studies from the Indian companies over here. The challenges that we typically face, when you look at, let's say, ESG reporting or sustainability consulting as such, yeah. Since we come from that particular domain, I thought that I can probably share some of my experiences in terms of project to project how it varies, and I've tried to consolidate and try to put as much as possible, thanks to, let's say, the last 8 to 10 projects that we have done from a sustainability slash ESG consulting, as well as ESG automation per se. uh, I also have a slide on the GRI's alignment with the global standards, because it is important for you to understand that GRI doesn't work in isolation. It works very closely with let's say the other frameworks which are prevalent in the global markets today. Lastly, we can always have, let's say, the closing thoughts, have a summary of sorts, and then a quick Q&A for any of the queries or questions that all of you might have towards the subject. Please brace up. The next hour, 45 minutes is going to be a little technical. I mean, I hate to say this, but the subject, I'll try to make it as interesting as possible so that you have lots of takeaways from this particular session. And at the end of the session, I'm also happy to connect offline, take your queries. Probably you can send it to, let's say, ICAI, SRSB. We can always respond back in writing in terms of what exactly the your query is actually all about. Yeah. A quick word. I mean, you need to know who exactly am I. So my name is Kaushik Mahadevan. As I was introduced during the start of the session, I finished my CA, ICWA, did ERP consulting, CRM consulting, analytics all my life, and for the last 5 years, I took some interest on the data as well as the AI scheme of things. While I co-founded my second venture, which is called as Focio Technologies, that's when we chanced upon the subject of ESG slash sustainability. This was back in 2022-23. Today, we have our own full-blown stack of, let's say, IPs that we offer on data, AI, as well as on the ESG stack of things. And I basically handle channel partnership alliances and work very closely with our product teams to develop the IPs and take it to the global markets as well as markets in India. Yeah, that's a short brief about myself. Moving on. Now, even before we get on to, let's say, something called as GRI, I think it is important for all of us to understand, I mean, how, let's say, the whole landscape actually has evolved. Where are we today and how it actually came into existence in the first place, right? We saw the earliest adoption, let's say back in the year 2000 and 2010. Some of you might be surprised knowing this, let's say an organization like ONGC has been reporting in its annual financial statements for the last 25 years. Now, which is a great testimony to the fact that, I mean, here is an organization without even a regulatory push, voluntarily, I mean, has actually, I mean, done this. So similarly, there are a lot of organizations globally who have actually done this. So if you ask me, if you ask any of the, let's say, sustainability professionals, they'll say there are a lot of companies in the past who voluntarily, in good faith, in being those good Samaritans that, that they were, the leadership teams were, they wanted to voluntarily, publish their reports, because traditionally, if you look at financial statements, it is considered to be a very internal document per se, right? But some of the elements, when it comes to, let's say, PSUs or let's say companies who are expected to, let's say, make their financials public, they had that thing in him to go ahead and actually publish it and say that, I mean, this is what we are doing. We may be at fault, but these are the course corrections that we are actually doing over a period of time. Then I think, between the 2010, 2015, we always had that CSR, gaining some prominence over a period of time. We made organizations, crossing a certain threshold of turnover to set aside a budget and say that, what is that they are actually doing as a payback to the society, which was the corporate social responsibility as a mandate, which over a period of time also coincided, aligned, and became what we knew earlier called as the BRR, right? When SEBI had initially come out with this. But this finally, I mean, when, let's say, globally, when all the economies, the world leaders were even in the conference of parties. I'm not sure how many of you are aware about this. The COP, the recently concluded COP 29, which happened. I mean, all of these, kind of motivated, let's say, the landscape in India to also take into consideration and try to imbibe some of the nuances what globally is happening, and try to come out with a framework of our own. That's how I think SEBI eventually came out in the 21, 22, and now we have an evolved framework of sorts, which I think there's a lot of work which is actually happening. And there was a recent article as well where we were made aware that there are consequences which is coming in place for greenwashing, for blue washing, for lots of, let's say, things that you don't resort as an organization, right? Very quickly, the current landscape, if you look at it, I think all of us are actually aware. We are looking at let's say, the top 1,000 companies wanting to be uh, reporting their, let's say, ESG practices. The market size is actually growing exponentially. There are investors who are actually speaking to us as well, I mean, where if we don't follow ourselves, saying that, in any startup today, if there is a large investor, the investor wants that leadership team to speak sustainability. They want them to actually prove by action, not just by words, saying that, I mean, what is that they are doing from their perspective, and how sustainable is their business model, taking into consideration the whole sustainability initiative as such. Yeah. And this is all a reality. I'm not actually, putting something over here which is kind of a jargonish for you to not, let's say, I mean, abide or consume it. You all know that, I mean, India has already pledged that, by 2070 we are looking at a net zero model. And if you go to the UN website, the UN SDG website, you can clearly see how every country is actually faring. Again, I'm not sure how many of you know this. The United Nations Sustainable Development Goals portal very clearly gives you an indication of how it basically rolls up, how every country is actually doing in its commitment towards the net zero goals per se, right? Today we are also looking at, let's say, the rise in green bonds. Very recently, one of our customers who happens to be in the NBFC, in fact in the banking segment, they reached out to us. Why? Because uh, their lending policies now are being governed by, let's say, the federal bank to who they report to in their particular country, saying that, if they don't have sustainable practices, if they don't have, let's say, ESG reports published, the lending rates, there is going to be a huge difference. They will end up, I mean, probably paying, or let's say, having a penalty of sorts. So the whole conversation is actually getting real in terms of, how, let's say, the adoption in terms of sustainability is actually picking up. So this is just a summary of the earlier slide that you saw. I also thought that, globally you should understand where exactly everybody is leading towards to. Europe is leading the pack at this point of time. Besides GRI, we have something called a CSRD, which is a framework which is again becoming very prevalent. United States, unfortunately, you see a red dot over here. Some of you might know why, because President Trump, very recently, when he came to power, he actually walked out of the Paris Agreement. So because of that, if you see, there are a lot of, let's say, large organizations today, American organizations, of course, they have moved away from their pledge towards, let's say, something like a DEI, yeah, which is diversity, equality, and inclusivity, right? Because which is a great social consciousness measure. But unfortunately, today, I think in the USA, we can clearly see the markets are actually, I wouldn't say depleting, but I think the initiatives are, I mean, slowing down per se. Barring United States, I think most of the other countries and continents are way ahead in their initiative. Very recently, we are also engaged within a couple of firms in Australia as well as Singapore. There is a huge market which is actually, getting exponentially growing over a period of time in terms of, ESG adoption as well as framework adoption per se. Some of you also had questions saying that, I mean, okay, fine, we understand in India, there are some companies, who are actually doing ESG or sustainability reporting. But what sort of companies, ideally are embarking on this particular journey? Just to summarize or give you a quick view about, how this is actually looking at this point of time. Public listed company, large private organizations, financial institutions, large MNCs, even if they are not, let's say, publicly listed or not listed in BSEs, stock exchanges, they still are actually resorting to ESG practices. Because I'll give you a simple example. Today, if let's say, uh, if let's say a Pepsi is actually doing ESG or a sustainability reporting, it will automatically push Coke to actually adopt it because it's a competitive landscape, correct? If there is let's say, a retail chain like DMart, for example, I mean, of course, DMart is listed, so I shouldn't be taking that example. But if DMart is actually doing it, so obviously, let's say, no, I mean, the other competition on the other side will have to actually take up sustainability reporting voluntarily, because that the whole competitive landscape kind of pushes everybody to actually resort to this particular bit. High environmental industries, energy, manufacturing, mining, agriculture, some of the SMEs, government sector, public listed companies, consumer facing industries, because a lot of these companies, today's consumers are, let's say, the 20 somethings and 30 somethings, and they're all smart bunch of kids, who understand through social media. The awareness is very high, the visibility is very high. Something you do or something you don't do today, it is very visible in social media, and quickly, it all goes like a rapid fire, right? I mean, that's when, a negative branding, is always called like an elevator pitch, right? It takes a staircase pitch to build reputation or branding over a period of time, because it takes years to actually build a reputation. But when it comes to a negativity or a negative branding, that's a staircase pitch. I mean, that's a elevator pitch. It just comes down like a nine pin, I mean, let's say, over a period of time, right? Uh, but then lots of you, a lot of people like you, who are actually attending today, again, unfortunately, have this understanding that when you talk about sustainability or ESG, it is everything to do with environment. That is not the case. Yeah. So which is why it is very, very important for all of us to understand, take a step back. As I said, I know all of you are patiently, I've been waiting for, to understand what GRI is actually all about. Just bear with me for about 5 more minutes. I'll quickly jump on to the actual topic. Yeah. This is for people, who still are not very clear about, what is ESG? What is sustainability? Is it only environment? Is it something else? What was the origin of it? How did it come out? So it's very important for all of us, because I believe most of you over here, the accounting and the audit and the financial, the finance professionals that we are looking at in this particular session, uh, some of you might be in the leadership capacity in your organizations, right? Or you might be, running your own audit firms and other bits, right? Now you have that decision-making power to, let's say, do the right things in this perspective, right? But if you don't understand right from the word go, right from the basics of what ESG is or what sustainability is, you will not be able to do justice to it. It is like, I mean, I'll give you another example. We interact with quite a few CIOs because, we are in the tech automation space, right? Now, lots of CIOs come to us and say that, हमको AI चाहिए. Now, for you to, let's say, have artificial intelligence in place, what is the first thing that is required? It is the understanding of it, correct? And when you talk about understanding of AI, it all pontificates to the fact that, how well is your data residing in your scheme of things? There is no AI without data. And unfortunately or fortunately, there is no sustainability again without data. So which is why it is very important for all of you to understand, what exactly we are talking about. Yeah. So which is why I thought that, I mean, we should cover this quickly. I had conducted an in-person session some days back, where I asked saying that, I mean, how many of you feel sustainability is only about environment? You will not believe at least 60% of them raised their hands and said that, it is only about environment. I said, wow, the audience is attentive. Um, I said, you're not the only one. There are a lot of people who actually think, that is the case. Let us deep dive a little in this particular subject and quickly see, what exactly this encompasses of. We are here to demystify sustainability in the first place. I mean, that is what our parent topic talks about today, right? Now, sustainability is a more comprehensive, let's say, subject. ESG is a part of, let's say, sustainability as an offering. ESG is very specific towards certain matrices which an organization is expected to report using certain frameworks, right? Frameworks like BRSR, frameworks like GRI, for that matter. Sustainability in a wholer or let's say on a deeper context, it basically encompasses. It's like, let's say, the whole wheel, and out of which, let's say, a few cogs is actually what ESG is actually all about, right? Sustainability can be anything, because that is more long term in nature, that is more inward as well as outward. But when you talk about ESG reporting per se, that is more external, that is more for, let's say, having a stakeholder inclusivity, that is more to also make the external world aware about, how your business decisions, are not negatively impacting the people, the planet, and the profit side of things. So simply put, we all understand profits, correct? Now, every organization is allowed to make profits, but not at the cost of, negatively impacting the people and the planet side of things. That, in effect, is what, let's say, sustainability is actually all about. Yeah. And when you put an organization to specifically report on a few topics around the triple P, which is people, planet, and the profitability, or the profit side of things, in effect, you're asking them to report on the ESG side of things. Yeah. Over a period of time, this collectively will become a sustainable business model. So ESG is a part of a complete whole called as sustainability as such. Yeah. So it's very important for all of you to actually understand this. And this is just a summary of what I actually just said. It's like, the aspects around environment, the aspects around social, and the aspects around governance with respect to, let's say, ethics, governance with respect to transparency, governance with respect to the corporate practices that any organization adopts. It might be anything like a DEI. It might be anything like what sort of racism policies do you have as a global organization? Um, what sort of inclusivity metrics do you have? What sort of gender parity do you have? Do you have enough, let's say, enough women in your leadership teams? Yeah, I mean, what is your simple? What's your male to female ratio as an organization? So aspects like these, which typically, if you see, it sounds very basic, but all of you will be appalled. Some of you, who might be starting your careers, you will be appalled to know none of the organizations. I can tell you with my experience, none of them, I mean, capture most of these what I actually just told from a social consciousness point of view, which is unfortunate, isn't it? So that is where, when you look at, let's say, ESG as a context, it aims to actually push organizations to transparently start reporting, let's say, what exactly we are actually speaking about over here. Yeah. And of course, ESG also aims to enhance your business practices, reduce your risks, and in a long-term perspective, create, let's say, I mean, value for everybody that is actually involved with the organization internally as well as on the external side of things. Yeah. Um the whole, let's say, concept of ESG, came into existence as early as in the 1960s. We were, in fact, the whole mankind used to humankind. I'm sorry, it's not mankind, it's humankind. We were made aware to know that there is something called as socially responsible investing. Now, this eventually gave birth. A lot of companies, they started actually adopting this as a practice. Like how I gave an example of ONGC. Similarly, a lot of companies in 60s who were all, let's say, market leaders, who wanted to disrupt, but who wanted also to conduct businesses in all fairness. They actually started reporting on these particular aspects, without even anybody really asking them to do it. Over a period of time, when the whole importance actually, started gaining, when India opened up, let's say, the whole privatization actually happened in the early 90s and other stuff, that gave birth to, something called as the corporate social responsibility, or the CSR as we know today. UN came into the picture at some point of time. They started actually, working on this particular aspect. You will again be very appalled and surprised or flummoxed to know what we are witnessing today from an ESG perspective. Ideally, this was getting launched in the early 2000s. Not many are aware about this. But unfortunately, what happened in the 2008, 2000, we had a great recession. Again, I'm not sure how many of you are really aware about it. We had a recession back in 2008 and 2009, which took jobs, which the markets actually collapsed. We had a terrible times, when back then. With that, obviously, the survival itself of organizations become, let's say, a question. In that situation, if you go to somebody and say that, start your ESG reporting, obviously it wouldn't have actually flown, right? So nothing really worked at that point of time. Things started taking a little more shape, around the 2015 when the Paris Agreement was signed, when United Nations came out with a very clear mandate called as the Sustainable Development Goals. What you see on the screen right now, on the bottom of your screen, is a depiction of 17 UN Sustainable Development Goals, which today everybody calls or everybody says that ESG or sustainability focused reporting basis. So this becomes the whole pretext of how, let's say, ESG reporting works, how the concept of sustainability actually originates, or what does it actually touch upon. Even frameworks like GRI have taken this as the basis. In fact, if some of you are pursuing your GRI certification, you will also see there is a big module dedicated to let's say GRI's alignment with the SDGs that you see over here. The other thing that you need to be aware about, let's say, the entire 17 goals over here is, at the start we said that is sustainability or ESG only about environment? This will answer your any, let's say, cobwebs or any questions that you have in your mind. If you see over here, there are about 11 tiles which specifically pertains under the bracket of social, which is to do with people, right? So not all ESG is only about environment. Environment is only about, in my opinion, 30 to 35% of the overall problems. Because unfortunately today, anybody you speak to about ESG, everybody wants to just, talk about air quality management. Everybody wants to talk about water or waste management and other stuff, which is good. I mean, I'm not saying, I'm not trying to demean, but there are elements with respect to, let's say, the social side of things, which also needs to be covered, which is where unfortunately a lot of these large organizations are doing away. They are pulling back because I told you, right, because USA has taken a stance, and a lot of, let's say, American multinationals today are actually walking away from not resorting or reporting on measures like social consciousness, or specifically to do with, let's say, DEI as one of the offerings as such. Governance in one way or the other in your financial reporting, we know that some element of it gets covered, if not, let's say, all of it, right? So this is very important for all of you to understand, and more so if you are aiming to become a sustainability consultant or a sustainability professional over a period of time. I'll quickly touch upon the underlying principles of ESG, because this again becomes a pretext of a framework like GRI as well. Yeah, it is not just to do with ESG. Now, there is this big focus on materiality. All of us finance professionals over here, we all know what is materiality. But materiality, we understand in the context of only, let's say, from a financial terms, correct? Now, the whole context of ESG today is actually focusing on something called as, which is now giving rise to something called as a double materiality. Because traditionally, as I said, every organization is expected to file their financial statements, which is very inward in nature. You don't file your financial, not all organizations file it and are required to put up on their websites, correct? So now we are looking at, let's say, organizations who are expected to, also have an outward reporting of sorts. So the second incidence of materiality, when anybody speaks about double materiality, is the implication of sustainability uh, in the organization scheme of things. Yeah. So today organizations are talking about double materiality. Its incidence on their business making, their business decision making powers, and how well they are actually engaging with the stakeholders. I'll come to it in a bit. Yeah. There is a high pedigree of transparency which is actually required when anybody speaks about, let's say, ESG or ESG reporting. The data needs to be relevant, the data needs to be transparent, the data needs to be consistent, the data needs to be accurate. And there has to be a very high pedigree of integration, because this is not like an ERP or any other, let's say, tally software where you can enter data, taking your, let's say, invoices or bills, you start entering into the system. No, because this goes a little beyond, right? To give you an example today, like, let's say if I'm traveling to, let's say, Sydney tomorrow. Yeah. Now, I step out of my, let's say, house. I take a, let's say, a car to the airport. I take an airline. I fly out. I go to Sydney, do my work, and come back. Now, this whole transaction reeks of, let's say, emissions, right? In fact, it goes a step ahead in terms of, who was the driver, what nationality he belongs to. There are a number of elements in this particular transaction if I really dissect it. Now, do you think somebody is going to sit and actually enter this particular data? The answer is no. Somewhere there needs to be an automation, and automation to an extent, the fact that Kaushik Mahadevan took a flight. He rode a, let's say, a diesel vehicle, a petrol vehicle, or a EV vehicle. And let's say from my residence to the airport, if it is about 50 kilometers, it has got implications from an emissions point of view. All of this becomes data. Now, you can't expect, let's say, people to sit and actually enter data in an organizational scheme of things, which is where, if you look at point number 2, 3, 4, 5, and 6, it very clearly pontificates that it is very dependent on data. This is where the nexus of, let's say, ESG and data comes into the picture. If your ESG placeholder or wherever you're capturing this particular data does not have, let's say, a backend data pipeline which has got the capability to capture data from the source, and the source can be an ERP, the source can be an HR system, the source can be even your websites, the source can be a company's LinkedIn, let's say, page. The source can be, let's say, a Twitter or a X handle as well, or an Instagram handle as well, because today there are consumers, there are people, there are employees, speaking about a certain company everywhere, correct? And then there is, let's say, we all have this tendency of taking notes in our notepad, right? Now, today, the notepad also is becoming a source of data. Now, if this data needs to be getting into, let's say, in some meaningful form, you have to capture it somewhere, right? That's where the unstructured data comes into the picture, right? So all of this put together, you need to have a data pipeline, a very high pedigree of integration in place, which then, keeps on passing this particular data onto your ESG platforms, so that that data then gets converted into ESG metrics. Because just capturing raw data is not going to be of help. All of you need to understand that when a framework like GRI helps you to capture data, you have to capture the raw data, convert it into acceptable, let's say, any of the globally accepted, let's say, metrics, convert that particular data into ESG readable metrics, so that this then gets into your ESG reports or ESG reporting in line with a framework based reporting like GRI or let's say BRSR, as the case may be. Yeah. Um the whole concept of ESG has got a great nexus towards stakeholder engagement, which is inward as well as external. Now, as low, I'm again not trying to demean over here, but as low in the value chain, let's say your housekeeping service providers, even they have a say in, let's say, something called as ESG reporting. Yeah, so it's got a very high pedigree of, let's say, stakeholder inclusivity internally as well as externally. GRI again is no different. GRI also speaks very clearly about how you are supposed to go about with respect to stakeholder engagement. There is this process called as materiality assessment. I think I'm going to touch upon that particular topic as well in the later slides. You will then understand how exactly and what exactly am I speaking about over here. This is not short term. You can't just start something and say that no, I'm not going to do it from tomorrow. This has got a long term implication of sorts. So you will have to keep doing it over a period of time. So it's got a long term implication. It aims for continuous improvement. And very importantly, it has got a cyclical behavior. Now, today, if let's say I'm engaged, if my organization is engaged with ICAI as a service provider, ICAI may be very high in their uh, ESG thought process or their ESG strategies, right? One of the things which ICAI will start pushing is the fact that they will ensure all their vendors, all their customers to start with need to adopt ESG practices, right? So they might give me one, let's say, leeway saying that this year you'll have to do something. The year two, if I don't prove in writing in action saying that no, this is what, let's say, my organization has actually resorted to from a ESG practice point of view, ICAI has got all the authority and say that I'm not going to deal with somebody who is not very high on ESG, let's say, adoption, because it is impacting my pedigree with my customers. Yeah. So that is how today, if you look at it, it has got a very cyclical impact of sorts. When SEBI had actually initially announced, I think the initial number was about 500. It got up to let's say 1,000 today. But today, if you realistically see this, that 1,000 companies are now impacting at least 2,000, 3,000 more companies. I'm told that, let's say, large organizations, what they do today is they're asking their top 10 vendors and their, I mean, top 10 suppliers and top 10 customers to prove that, what sort of ESG value chain, do they have in their scheme of things. And some of them are moving away from them, saying that I don't want to work with you unless and until you prove this, because this is impacting my credibility with my customers, vendors, employees, and so on and so forth. So to that extent, this is a very cyclical implication of sorts. I also thought this might be important for you, but I think I'll touch upon this at the end of, let's say, our session today, because some of you also asked me saying that, how, let's say, CFOs are actually impacted as far as ESG reporting is concerned, or let's say the topic of ESG is actually concerned. I'm increasingly witnessing that, globally as well as in India, uh, the whole ESG reporting or sustainability as a concept is getting rolled up to, let's say, the finance leadership. So, which is why all of you sitting over here, this is very important for all of you. Although it is a C-suite problem, when I say C-suite, I'm talking about the CEO, CFO, CIO, as well as the COOs of any organization. But typically, we are greatly witnessing that it is becoming a problem for CFO. I'm not saying problem, but it is more of a KPI for the CFO, where the responsibility is with the CFO, the accountability is with the CEO. Yeah, because the CEO doesn't want, let's say, any sort of greenwashing or blue washing issues. He wants, let's say, a strategic alignment, have a stakeholder engagement. He would be answerable to, let's say, the chairman, or let's say, the parent organizations or investors and other stuff. From a CFO's perspective, the access to capital is really drying up. If you look at large organizations like BlackRock, Texas, even Sequoia Capital, they're not willing to fund even their existing portfolio of companies or any new investments unless and until the leadership team is trying to prove that there is an X amount of ESG strategies in place in terms of our adoption and practice. Yeah, they also realize that over a period of time this is going to reduce your, let's say, cost. In fact, it is going to increase efficiency, is going to reduce risk mitigation and risk prone strategies. Investor relations are going to be actually impacted. Finally, the regulatory compliance and reporting, if you look at it, anything to do with reporting, fortunately or unfortunately, it is the finance team which gets into the picture one way or the other. And many of the touch points as far as ESG is concerned has got financial implications. So, which is why we are seeing increasingly this is now becoming the finance leadership's problems. Some of the large organizations have also started appointing specific roles called as chief sustainability officers, who are actually taking up this as, let's say, a full-time role of sorts. Yeah, but I think we are still in the evolution phase at this point of time. Yeah. Now, even before we get to the GRI, again, I think we have set the pretext, we have understood the landscape, we have understood who is impacted by it. We understood the principles of it. And I think we have briefly understood about the difference between sustainability as well as ESG. Now it is important for us to understand that how frameworks basically work. What do frameworks mean? Why do they matter? And how does it basically helps businesses, right? Now, typically, as I said, for all of you to understand the easiest example, I mean, maybe this is too much theory over here, but the easiest example for all of you to understand, at the start of my session, I told you about the income tax framework, correct? There is an element of standardization. And why is it required? So that there is a like-to-like comparison. You know exactly everybody is following a certain format. There is a peer benchmarking of sorts. Tracking becomes a little more easy. And there is a recording of it, and that when you have an ITR proof, which is a result of let's say a very, very clearly driven in income tax framework which directs every individual to file their income tax returns, right? Similarly, an ESG framework is a guideline, is more of let's say for you to adopt and go with your ESG reporting, saying that this is how I'm supposed to report on my ESG practices. You understand relevant sustainable topics, you try to track the key metrics, and you start communicating the progress to the stakeholders, which is internal as well as the external stakeholders, right? Why do you use a ESG framework? One, as I said, benchmarkings, and how you are actually doing when you have a like-to-like comparison. Now, you might say, I mean, you might be a CEO in this particular session, right? You might say, I want to take up ESG reporting. Fine, take up ESG reporting. What next? Now, the what next is where the framework comes into the picture. Today, depending on the industry that you belong to, you have frameworks which is available for you. You will have to probably consult specialists, you will have to take guidance from them and start embarking on this particular journey, go through that whole, let's say 9 miles of understanding what the context is, how you can implement ESG in your own set of scheme of things, how you start reporting, and as I said, this is not something that in the first year you do it, you keep let's say you have achieved your let's say golden rank over there. No, because this is a moving target. Now, ESG will help you over a period of time. If you understood the principles well, what we spoke about 5 minutes back, you will understand that there is a great uh, implication of let's say helping strengthening your business decisions and making you an organization to vouch for, because consumers will look at you from a different perspective. Needless to say, there is a huge element of standardization which comes into the picture. Again, going back to that income tax example, now the ITRs will look similar for everybody, right? So the comparison becomes easy. Although input might vary depending on if you are a professional, if you are a salaried employee, if you fall under some other bracket, and so on and so forth, right? Then comes, let's say, the transparency, because as I said, if you are not transparently reporting, that amounts again to greenwashing and bluewashing. And again, a lot of, let's say, emerged economies are already penalizing organizations for wrong reporting, half reporting, and misreporting, right? So, which is why when you take a, let's say, ESG framework, half the battle is won over there, because once you're able to prove to the auditors saying that we have used GRI as a framework, the standard is already set. So the auditors, or let's say whoever is assessing you or conducting any sort of, let's say engagement with you, they exactly know what to do and what to follow. So there is an element of transparency, there's an element of standardization over there. Finally, the whole thought process is for compliance, correct? if you are actually, when adopting, let's say, a certain reputed, internationally acceptable or a regional framework for that matter, which is widely accepted, there is a compliance norm that you're actually kind of adopting. So, in summary, an ESG framework is a structured approach to sustainability. It helps organizations to transparently report so that they can start comparing themselves with their, let's say, competition or have a peer benchmarking of sorts, and ensure that there is a fair degree or pedigree of compliance in place. Yeah. And finally, the whole idea is that again, ESG is not inward, it is completely external. So if you have to tell your ESG story, you need to have data, and that data needs to be in a structured format, and that structured format is where framework comes into the picture. Yeah. I hope we are clear till now. Now we are getting on to the actual, let's say, GRI as a subject. But before that, again, it's good for all of you to understand that the kind of frameworks that we have all across. Of course, GRI will keep GRI aside for a minute. I'll come to it. The next 10 to 15 slides is all completely about GRI. So there is a lot for you to absorb and probably decipher in terms of what we are talking about. We already saw Sustainable Development Goals, which is a United Nations initiative, which in my opinion is the crux of let's say the whole conversation around ESG or sustainability, right? And a lot of the international, or let's say even the local or regional frameworks like let's say BRSR are now slowly aligning with something called as the the UN SDGs as well, right? We'll come to that in a bit. We have something called as Sustainability Accounting Standards Board. We have CSRD, which is again one of the reputed framework back in Europe, which is gaining prominence. And as recent as I think in the last quarter or so, CSRD has now, let's say, started working with GRI as well. Yeah, there's an alignment between all of these frameworks, one way or the other. Because one question which will come to your mind is, why are there so many frameworks? Yeah. At the end of the session, I hope you will get some answers to that particular question. And again, since we are on the frameworks, you will again be appalled to know the number of frameworks that we have today out in the market. I urge you to Google right away. There are more than 600 frameworks, which is actually available from an ESG reporting. The consumers, the customers, the organizations are very, very confused today, because even if you understand what ESG or ESG reporting is, they are still clueless, which framework is actually the most prevalent or the most apt for us, right? And I think, even if we were in their shoes, I mean, we also would have been facing the same conundrum, right? Like here, if you look at, let's say, the Carbon Disclosure Project is very specific to, let's say, disclosing your, let's say, carbon tracking. I mean, and typically, let's say, oil and gas, for example, I mean, they are the ones who actually use this very, very, very explicitly, because it is very specific to them. When you look at an IFRS as a framework today, I don't think IFRS has really reached that state saying that it is a framework, like how mature GRI is. But IFRS has started actually issuing accounting standards, S1 and S2. So there is a guideline in place in terms of what you need to do. Similarly, the task force for the financial disclosures, which is TCFD, is again gaining popularity in territories like Ireland, in territories like UK, and in some of the places like Europe as well. But having said that, the most common, the most internationally reputed, let's say, framework today happens to be GRI, followed by closely even CSRD. Yeah. Maybe I'll urge ICI to conduct, let's say, a session on CSRD as well, because it is now gaining popularity in the international scheme of things as well. Yeah. Nevertheless, let's come to, let's say, the topic, the hero of the moment, for which we are all assembled over here, which is introduction to GRI standards. Now, GRI basically stands for Global Reporting Initiative. Uh, GRI is a framework. Yeah, more than a standard, it is actually a framework. It is a guideline, and they have been around. You will be appalled again to know that they have been around since 1997. Yeah. Now, started off as a very small NGO, not NGO, but let's say a not for profit organization. They still are. But today, I think their magnanimity of their offerings and what they do today is absolutely humongous. From guiding organizations to taking up, let's say, ESG reporting, to creating sustainability professionals, to partnering with, let's say, organizations, guiding them on how to, let's say, adopt GRI as a process, how to automate, how to have let's say the domain marrying the automation side of things. There are a lot of things which GRI basically does today. Yeah. So you can go to GRI's portal, which is this, and you can, I mean, have a complete walkthrough of it. They have a beginner's course. They have an advanced professional course, which is what, we did as sustainability professionals, and anybody who gets certified as a sustainability professional, they've got a countrywide listing of, let's say, people who are sustainability professionals. There are not many in India. When I say not many, it's not that, there are very few hundreds or something. There are, but then it is still, I mean, we are still gaining. The whole concept of GRI reporting is gaining prominence at this point of time, right? You will see a lot more traction, let's say, in developed countries, where you will see a lot of, let's say, GRI consultants, already prevalent over there, because obviously, they are based in Netherlands, quite a big thing back in the European scheme of things. So what is GRI? GRI, I think by now we have already spoken much. They are a framework for sustainability reporting, helping organizations to report on certain metrics around environment, um, uh, the social side of things, and let's say the governance aspects. Yeah. Now the purpose is basically to have some element of structure to ESG reporting, some element of guidelines on how, let's say, an organization is supposed to go about reporting, let's say, the ESG metrics, reporting their ESG data internally as well as externally, right? Now, the way GRI is structured is basically they've got three set of standards. One is called as the universal standards, which is applicable to all the organizations, irrespective of, what sector they belong to. We'll cover that in the next slide. Then there is something called as sector standards. Now today, GRI has already issued sector-specific standards for, let's say, mining, oil and gas, basically the high impact or high stake industry. They are going in that particular order, right? So for about 4 or 5 industries, there are very clear sector specific guidelines on how they are supposed to go about their ESG reporting. And we are informed that, there are the works is already underway for covering 40 more sector specific standards. I keep getting a lot of questions, from attendees saying that, I mean, if there are only 4 sectors, and if, let's say, my sector is not listed over there, what am I supposed to do? In which case, they will have to take, let's say, the closest sector which is actually applicable for them. They need to document it. Why is that, they are actually adopting it? As long as there is a rationale behind what, let's say, every organization is actually doing in terms of the sector specific standard that they are adopting, which is not listed right now, the auditors will be okay, and the auditors are okay. I mean, that's what we are actually witnessing at this point of time. Once you pick up a sector specific standardized reporting, let's say, format, the next comes the actual topics. Because if you are a oil and gas company, your topics that you are expected to report might be different to, let's say, a mining industry, or to a oil and gas industry, correct? Both are completely different altogether, right? So what happens is universal standard is, as it says, that, it is applicable for everybody. It is a standardized disclosure of, how, let's say, every organization is going about their ESG reporting. Sector standard is very specific, like, which sector you belong to. Within each sector, you then are also guided, or you're also told by GRI which topics you are specifically supposed to cover in your ESG reporting. Yeah, I hope that makes sense. Anyways, we'll deep dive a little more in the next 20 minutes or so. The importance of GRI, I think by now it is clear. There is an element of standardization, there is transparency. I don't want to keep boring you by repeating the same set of words, but this is like the SEO optimization. You know how SEO optimization works in a website, right? Typically, when you go to Google and say that, the top ESG consultant, if I want my name to pop up over there, uh, my name has to be there in all of the, let's say, repeatedly, my name has to be there in, let's say, LinkedIn, Instagram, my website, anywhere. That is when SEOs work. So I'm trying to do an SEO for all of you, so that, you take away saying that, standardization, transparency, materiality, stakeholder inclusivity, and other stuff. They're all, let's say, the common jargons or common terminologies that you need to start speaking in an ESG context. Yeah. So that is how GRI's importance comes into the picture. Today, in fact, this number should be a little more because I didn't update this particular slide. Pardon me for my oversight over here. I think this should have gone up to at least about 13,000 to 14,000 companies because they are rapidly getting adopted worldwide. in more than 120 countries at this point of time, and they are becoming the OGs of, let's say, having a reporting framework in place, widely adopted, and most of the auditors or, let's say, large consulting houses uh, will give respect to an organization which adopts GRI as a ESG reporting framework or a guideline. The good thing about GRI is they got a large set of team members. They work with UN. They work with other frameworks as well, which is very specific to certain industries. There are a lot of workshops, which keeps on happening between both, and there are then guidelines and white papers and releases which keeps on coming out. If you follow them on LinkedIn, they are very active. There are a lot of things which gets published and which also serves as a guideline for us to understand this ever evolving subject called sustainability. Yeah, if you're not already following them, I'll urge to follow them, and their website is very rich. There is a lot of content that is actually available for somebody who is an avid or a, let's say, a voracious reader who likes to understand where the entire landscape is actually really exploding. Then I think you're in for a party. And for the people who are interested in getting qualified or getting, let's say, certified repeatedly, there are a lot of courses, beginner courses, advanced courses available on their website. And just like how, let's say, ICAI functions, they also ensure that their members continuously keep on upgrading themselves. So once you get listed, it is not for life. You will have to continuously learn, you will have to continuously read, undergo certifications. So I think every year you're expected to undergo and earn 4 CEUs, yeah, which I think very similar to like any academic organizations like ICI basically does. They also have it. And the good thing is, again, you might see it as a good or as a challenge because um, the topics keep on changing year after year, right? Because some of it which was relevant for the last year may not be relevant this year because suddenly some regulation might have actually changed, but which will keep you on toes. Then you exactly know that you're completely updated in terms of what is actually happening. In fact, they're also coming out with courses where they're aligning GRI with let's say CSRD. They're aligning this with TCFD, in which case you start getting a dual know-how of how this basically works. Yeah. Anyways, let's deep dive a little more. I told you that GRI constitutes of standards, correct? Now, very simply, it is actually broken down into universal standards, sector standards, and topic standards. And as you can see at the bottom of the screen over here, uh, the universal standards apply to all companies. Any company who starts, let's say, adopting ESG reporting in line with GRI framework, they will have to start disclosing in line with GRI 1 what sort of, let's say, requirements and principles are they using to compile their reports, what sort of disclosures are they actually resorting to, what sort of disclosures and guidance about the organization's material topics. A material topic is, as the name suggests, a topic which is very high on material. Like for this particular quarter for organization A, they might say that we need to reduce our carbon footprint by 50%. So that's a material topic. But for them to do it, now they will have to start collating data, they will have to start reporting it, and that is where the nexus between universal standard and topic standard comes into the picture. Sorry to digress a little bit, but the way this is structured is a universal standard is global. Under that, you have then the sector standards. If you pick, let's say, sector standard GRI 11 for, let's say, mining, within mining, for example, hypothetical, within mining, you then start reporting what is specific as a topic that needs to be reported for mining as a sector. Similarly, if you pick up, let's say, oil and gas. So for oil and gas, what is that you're supposed to actually report? That becomes a topic standard specifically for that particular industry. Yeah. So I hope this is clear. This is the crux of it. And when you start, let's say your GRI, let's say certification process, obviously, I mean, you're going to deep dive a little more. But once you get certified, there are also sector specific certifications available. Today, obviously, I told you that there are only 4 sectors reporting which is published. But I think over a period of time, this is going to get ballooned. So there are going to be more sectors which will come in. And depending on which sectors you are specializing in already, you are free to take up the certification and keep on getting updated over a period of time. Yeah. Uh, the GRI universal standards, let me cover in a little bit more perspective. What it does basically is the GRI 1, for example, it basically sets the principles and the framework based on which an organization is expected to start reporting their ESG practices, right? Now, it's very akin to, let's say, our accounting standards as well, because there are some basic disclosures you need to tell that how did you let's say compile this particular report, what was the assumption, what sort of risk that you actually anticipated, how did you document it, what sort of data have you actually accumulated, and so on and so forth, right? GRI2, it ensures that the general information about the organization structure practices is very clearly elucidated. There are guidelines for it on how, let's say, an organization is supposed to go about it over a period of time. So it is very beautifully drafted, very easy to understand as well. GRI3 focuses on identifying and managing material topics because, as I said in the earlier example, for this quarter, you might say that I want to, let's say, take up my carbon footprint reduction. But for the next quarter, this may not be true. You might say that I want to increase my gender ratio by, let's say, 20%, correct? And all of this, I mean, let's say I can't come to this particular conclusion on my own. GRI very clearly mandates there is a process called as materiality assessment. Yeah. Now, materiality assessment as a process, what happens is you need to start, let's say, involving all your stakeholders, identify representatives internally, externally, head of the departments or process champions. Everyone gets into the picture. You start issuing questionnaires to everybody. There is a bulk of questionnaires that you can actually either get it from, let's say, GRI, or you basically evolve over a period of time. Send out these questionnaires, get the responses internally as well as externally from everyone. When I say externally, again, I need to touch upon a very important aspect over here. um, any organization which is any organization or a person who is impacted by your business decision becomes an external stakeholder for you. Yeah. And of course, internal stakeholders are your own employees, your immediate, let's say, leadership teams, anybody and everybody internally who has got some nexus or the other to the organization becomes an internal stakeholder. So the stakeholder inclusivity is very, very high in the case of let's say GRI based reporting. Now, once, let's say, the questionnaires are issued to all of them, you get back those questionnaires. You'll have to start grading those questionnaires and try to identify, according to your internal and external stakeholders, what are the top, let's say, 2, 3, 4, or 5 topics which the stakeholders want you to go behind, right? That will then result into actually you coming out with a material statement for your ESG reporting for this particular quarter or for this particular year. It completely depends on the organization, because one thing you will have to understand, you can't go behind everything, because when you start, let's say, your ESG reporting in the first year, you can either take up, let's say, some subtopic of, let's say, environment and say that I want to capture this while I touch upon, let's say, the other aspects. You keep on cleaning, you keep on ensuring that you're getting better in one aspect, and then start getting better on the other areas and other stuff. While it is a guideline, but materiality assessment is not a compulsion. Yeah, but that is the right way of let's say, doing your ESG reporting to start with. I also have a slide at the, I mean, towards the end of our session where I'll tell you that, I mean, how, let's say, once you understand everything, what are the steps that is actually involved in terms of adopting the ESG practices? How do you, let's say, collect data? How do you compile the data? How do you track it? And how eventually, or what do you do with that particular report at the end of it? Yeah, maybe at that stage, it will be a little more clearer for all of you. As I said, GRI sector standards today that are available today. Yeah, if you are, let's say, in oil and gas, coal, agriculture, aquaculture, fishing, mining, food and beverage, there is a very clear-cut sector standard available. It is for you to readily adopt and start, let's say, reporting on your ESG practices today. In fact, we have, let's say, a couple of customers, who are on the retail space. And as you see on the screen, although they wanted to adopt GRI reporting, GRI framework, there is no specific, let's say, retail specific, let's say, sector standard, which is still available at this stage. So what we did, we basically took nuances of, all of these sector standards. We tried and matched, saying that, which ones are actually applicable with a rationale behind it. It's not that, we are doing something of our own. The whole idea is that, if we know that, let's say, if something to do with social consciousness, like treating people fairly, inclusivity and other stuff. Those are pretty standard, and those are pretty common across all the sector standards. But some of it is very specific, right? Because the industry itself is completely different in that case. So you will have to use some sort of your logic and rationale at this stage till, let's say, GRI comes out with their own sector specific standards at this point of time. Fortunately for us, we also have let's say one company each in oil and gas. We also have a company who is in the marine industry as well, which in which case we adopted GRI 13 as let's say one of the sector standard. And once you use a certain sector or once you adopt a certain sector, what you see on the screen, that sector then gets ballooned out to what topics you are expected to report. That is how it is actually all structured. I hope I'm making sense over here. Now, in the order of priority, now these are the standards which GRI is actually expected to be working on. This is the information that we have at this point of time, where financial services, healthcare, textiles and apparel, and construction and real estate are the next ones, which are expected to be issued sometime during the course of, let's say the near future at this point of time. Yeah. So that's a nutshell about the sector standards. Let's also take a look about the topic standards. The economic standards are actually broken down into from the 200 series, as you can see: economic performance, market presence, indirect economic impacts, procurement practices, anti-corruption, anti-competitive behavior. This, if you look at it, it sounds very basic, but if you really delve into it a little more deeper, how do you get the data? How do you really prove that, I mean, let's say, to prove that, I mean, from a market presence point of view, I'm absolutely ethical a company. Procurement practices, maybe it's a little easy. Anti-corruption, very important, right? Very, very important. But we have seen so many case studies in the past where I think because of, let's say, I mean, not having the appropriate anti-corruption, let's say, policies or procedures in place, we have seen large consulting houses absolutely brought down, saying that you haven't done what you're supposed to do. Correct. Similarly, anti-competitive behavior. Now, how do you prove what exactly constitutes of anti-competitive behavior? So these are some of the challenges today organizations are facing. It is good to know that GRI says this, but how do we capture data? Where do we go for this, right? And so this is where we are today in terms of evolving in this particular space, saying that I mean, how do we capture some of the elements over here? Some of the organizations are being very transparent and saying that, I mean, I don't think we have the ability to capture this data, but we have the right intent to capture this, and these are the initiatives that we are actually taking. You document this, it is getting accepted at this point of time, but over a period of time, they will have to mature. They will have to find ways and overcome the constraints that they are actually facing today. The environmental standards are broken down into the GRI 300 series, as you can see: materials, energy, water and effluents, biodiversity, emissions, wastage, environmental compliance, supplier environmental assessment, and so on and so forth. So these are all constitute of, let's say, some of the environmental standard that it's just an example. I mean, there are many more, but then I just wanted to give you a gist of what exactly you're looking at, from a universal sector and a topic standards, because often there is a confusion with all the attendees saying that how different, let's say, each of these are. Eventually, the actual ESG reporting happens on your topic standards. This is where the data touch points come into the picture. Broadly put, all of this put together, including, let's say, the next element, which is the social standards, which is the bulk of it. If you break it down for any organization, there are about, in my opinion, about 200 to 300 questions that they are expected to answer. Those 200 to 300 questions eventually uh, further are nothing but let's say data touch points, saying that how, let's say, data, what sort of data you need. For example, let's say water and effluents. Now you might feel water and effluents in a manufacturing entity, for example. One, it is the production process itself. Second, it is the water consumption. Then comes your water wastage. Now water itself has got a linkage with let's say waste management, right? So there are a lot of implications. And do you really think today a lot of organizations are capturing this particular data? Unfortunately, no. Unfortunately, no. But that is where, let's say, uh, frameworks and, let's say, the guidelines are actually pushing organizations to prove that, what is that here? Because today, both water and wastage have got a huge implication from an environment perspective. Water, as you all know, most of the cities today, even in India, are actually, having an issue with water. You don't get, let's say, one seasonal rains. I mean, you don't know what is going to happen to the next generation. In fact, GRI puts it very beautifully from a, let's say, definition point of view. It says that, for you to understand sustainability, it's a very simple, let's say, logical statement where um, what is that you and me, as let's say, responsible civilians, or as a parent, or as a, let's say, brother, sister, or whatever, what is that we are actually doing today to ensure your future generation has got the same access to natural resources that you have today? It's a very deep statement. If you really think about it, are we doing something about it? I mean, we are just putting everything to the organizations, right? But we as an individual, what is that we are doing? At some point of time, I feel, even let's say, individually, every citizen needs to, let's say, rise up to this particular occasion. This cannot be just a business model, because it's a serious topic. Because I'm sure you guys would have heard about, let's say, I think about a couple of years back, Cape Town had a massive issue. I'm from Bangalore, so I think a year or a couple of years back, I'm sure you would have actually read about, let's say, in your tabloids, in the newspapers, or even on your Instagram reels, where people are going to the adjoining malls for their basic needs, because their, let's say, the communities or the buildings or the villas that they are staying didn't have water. Somebody who doesn't, who is not into their shoes, this might be very laughable as a topic, correct? But then come to think of it, if this happens to you, what are you going to do? The answer is you should have done this, let's say in the past. The past is now, right? What is today is going to be the past for the future, correct? So if we don't take care of it today, unfortunately, I mean, I think, we will just be an example. And I feel that all of us are still very fortunate that we don't have to go through, let's say such adversities, that some of the other citizens are actually, I mean, facing in a country like India, or for that matter in Cape Town. But I mean, it's a problem which is for real. And if these frameworks are not taken seriously, if ESG as a subject is not taken seriously, I think, there will be a day where, let's say there will be no water, which will be left on the planet Earth. But anyways, that again might sound very jargonish, but pardon me, I'm a little passionate about the subject, and which is why I thought probably, it is for all of us to do something, some bit of it. I mean, in fact, some of my team members always keep laughing at me when I tell them that, when I get into the shower, I don't use the, let's say, the head shower, because we don't realize it, the amount of water that you actually end up wasting. Because typically, if you see, let's say a bucket of water is more than sufficient for people to, let's say, take a, let's say, shower or a bath. But you taking a shower, and which is like, I'm going to waste, let's say, about 4 or 5 buckets of water, is criminal in my opinion, right? So what are we doing as an individual is a question to all of you. And I think if this question appeals to at least, let's say, 5 people out of all of you, I think this planet will be a better space to live in. Anyways, going on to the next topic, which is your social standards. So as you see now, all of this put together becomes, let's say, a set of topic standards. So again, to rephrase it, GRI very simply gives you the listing of, let's say, what universal standards is. Under that, what sector you belong to, pick up one particular sector, whichever sector that you want to report on. Under that particular sector, then you have, let's say, the topics, which is very clearly listed out. How are you supposed to go about it? And that itself will give you a direction to start collecting or collating data. Now, this data needs to be put in some form or the other. You will have to calculate the ESG metrics over there, and then start reporting in line with, let's say, the GRI uh, reporting guideline. Because GRI very beautifully gives you a guideline to how you are supposed to disclose your, let's say, eventual ESG metrics as well. Yeah. I hope that is clear, and I hope you get some sense of what GRI is actually all about. I also wanted to touch upon some of the other aspects now. Yeah, I'm assuming that I mean, you will have some questions. You can probably keep on putting it on the chat box, and probably at the end of the session we will have about 10-15 minutes of Q&A. Now, why GRI is relevant for Indian businesses? One is, let's say, the global recognition and credibility. In one of my previous sessions, I had actually opened up the ICICI's sustainability report. I'll again urge all of you to go to, let's say, ICICI Bank's portal. There is a tab called sustainability. Click on it. When you click, it says that sustainability reports are available for downloads. When you download it, they have very beautifully, let's say, elucidated the complete ESG reporting from their perspective. And some of the sections are very beautifully drafted in line with the BRSR guidelines. That is one section where gives the linkages between GRI and BRSR. if you ask me, they didn't have to. I mean, it was not required of them to do it. But you know why they're doing it? One, the BRSR compliance is imminent. They are a listed entity. They are governed by, let's say, what SEBI as well as the guidelines locally, regionally talk about. Now, globally, there are investors who might be sitting on their board, correct? And there would be other competition, let's say large banks, large institutions who might be looking at them from a global perspective as well. They wouldn't understand what BRSR is, correct? They would only understand a global framework like GRI. So ICICI, they have very beautifully listed out their ESG disclosures, and they are very beautifully reconciled how, let's say, from a BRSR perspective, they are compliant. And in the next column, they have also disclosed, from a GRI perspective, how are they actually compliant. So some of the organizations, in fact, who adopt GRI, let's say from an Indian context, do it for global recognition and credibility. Needless to say, by now there is a high pedigree of investor and stakeholder expectations which needs to be met. As I told you, there are large investment houses today. They are not willing to, let's say, lend a pie unless and until the leadership teams or let's say, the startup owners or even existing large organizations are, if they're not able to prove that they have ESG strategies in place, they are shying away from investing in those companies. There are a lot of such reports which is available. I can always share, let's say, few of it offline with all of you. There is a great pedigree of, let's say, transparency as well as accountability. Uh, the whole regulatory alignment with BRSR, because again, if you look at BRSR, for that matter, if you look at any ESG framework, it's very logical. The way, let's say, the whole drafting actually takes place, it takes the principles and the whole guideline or the standard is just dictating you, telling you that how you are supposed to go about adopting those principles. And BRSR is again no different. It's not that BRSR as well as GRI are very different, but because, let's say, BRSR is a recent thing, obviously there is a you might feel that it is a nuanced or a stripped down version of what, let's say, other frameworks are actually speaking about. But having said that, there is a great alignment between GRI as well as BRSR. A lot of elements are actually common in nature. Some of it, you might feel that is very specific in GRI. Some of it in BRSR is still evolving at this point of time. Building a brand reputation, because if you do something voluntarily, just imagine this: if you are doing something voluntarily and transparently publishing it and saying that this is what I do. I think today we are living in a world where let's say you adopt or let's say you are admitting to a mistake or you are admitting to a lack of let's say something that you are expected to do. I think the ownership or let's say the credibility of you as an organization goes uh, it actually gets amplified, right? Because I think honesty is still a virtue, but I think there are a lot of honest organizations who are doing it voluntarily, despite not really falling under a SEBI or a MCA guideline that they are supposed to start doing this, right? Improved decision making. I'm waiting for the day when some CEO comes and puts out an article and says that I mean, ever since we adopted our ESG practices, our bottom line has actually strengthened. Because trust me, if an organization does it religiously, one, it is going to push clean data. Second, it is going to push a very high pedigree of automation, which means there is no tinkering around. Because the moment you have manual intervention without technology in place, there's going to be tinkering with the data. Correct. Thirdly, if you keep doing your ESG, let's say adoption time on time, period on period, every business decision of yours, reeks about, let's say sustainability as a conversation. I think at some point of time, you will start realizing that, that is contributing to lessening of your costs, improving your profitability, maximizing your revenue. And every business wants that eventually, correct? But I think we are still a little far away from that particular, let's say, day. But having said that, there are quite a few CEOs who are a big fan of sustainability as a subject, and they have started speaking about it. But again, I mean, we'll have to wait and watch for the bigger picture to unfold over a period of time. Competitive advantage, as I told you, it's like a Pizza Hut doing something, Domino's not adopting or not copying what, let's say, Pizza Hut doing it is going to be a huge issue, right? So the competitive landscape is also pushing all the companies to actually resort to let's say the adoption. Enhanced stakeholder engagement, because I know by now you would have got bored about let's say hearing about stakeholder engagement, but you will have to understand from an ESG adoption, a framework adoption from a GRI perspective, it pushes a very high boundary of, let's say, stakeholders being involved. Any of the ESG reports, if let's say the auditors feel that the stakeholder engagement is questionable or debatable, uh, they will qualify the report. Yeah, because stakeholder engagement is a very very big aspect. As far as GRI based ESG reporting is actually concerned. Yeah. From a BRSR perspective, in fact, I'll cover a couple of let's say reports. I think I have some screenshots as well, which you can actually take a look and see how it basically aligns with let's say the aspects around let's say GRI as well as BRSR. Now, why let's say aligning GRI with BRSR makes sense? Number one, as I said, there is consistency. There is a high pedigree of efficiency. There is a comprehensive coverage. Let's say if there are some aspects which BRSR is still evolving, adopting GRI makes it a little more comprehensive. Your report might get accepted in a better perspective. While there is a certain element of, let's say, stakeholder engagement in BRSR, the stakeholder engagement in GRI is a little more comprehensive. So if somebody goes that whole 9 yards and tries to adopt, let's say, GRI as a framework, I think they're, walking the talk and trying to do what is expected of them as an organization which is honest and transparent. Again, regulatory compliance, although right now we are seeing that a lot of companies are resorting to, let's say, ESG reporting because there is a push from regulatory compliance bodies. But voluntarily, those companies who are actually resorting to ESG reporting, in fact, are the ones who are actually creating some sort of a disruptions in the market. Enhanced credibility, because the moment you talk about, let's say, again, when I said, sorry, it's getting too cold. So when you speak about, let's say, adopting a BRSR as a framework, and then you say that, since we want a global visibility, we also used GRI in our scheme of things, it kind of gives you a very global enhanced credibility and visibility of sorts. The reporting transition becomes, quite easy. In my opinion, adopting GRI and then let's say adopting BRSR becomes very easy because bulk of whatever you're doing in GRI is very comprehensively covered in BRSR and not the other way around, because you need to understand GRI is a evolved framework, BRSR is still evolving at this point of time, right? Market competitiveness, if there is a company which is actually resorting to BRSR, but you as an organization or your client or you yourself say that we do BRSR plus GRI as well, obviously from a consumer's mindset, one let's say the acceptance increases and you have a better, let's say stance of sorts in the eyes of your consumers, your employees as well. I'm also seeing increasingly this trend that uh, many of the let's say the senior leaders are refusing to join large organizations if they don't have a ESG strategy. Now you can go to LinkedIn, you can go to, let's say, Google and actually search for this. There is a published statistics, which is actually available, if I'm not mistaken, by Reuters or I think Gartner, if I'm not mistaken. Yeah. So there is a published information where it says that large organizations are witnessing where senior or middle management or even top leaders are refusing to join those organizations, which doesn't speak about, let's say, ESG in their blood and vein. Yeah, so that's just some trivia for all of you. Now, as a comparative, again, this I picked up from both ICICI and I think even from Mahindra, Tata, as well as I think Vedanta's sustainability report as well. Now, if some of the areas, if you look at it, the earlier slides I showed you, when you talk about environment, GRI, when it speaks about GRI 302, it very well aligns with the principle 6 of BRSR. Similarly, if you look at social 102 and 401, it aligns well with BRSR principle 3. Governance from a 205, which is anti-corruption, everybody's favorite topic, auditors' most favorite topic, but not so a favorite topic of, let's say, organizations or entrepreneurs, because it's very difficult to prove and have a documentation which talks about I'm not saying it is impossible. There are a lot of considerations when you talk about corruption, anti-corruption, and some of it is also a perceptionary based as well. I know it's a very condescending statement that I'm actually making, but some of the seniors of the industry over here will try to resonate with what I'm actually trying to say. But organizations are facing this challenge of, how do you realistically go about it, and how do you really disclose, let's say your governance measures and so on and so forth. This is the ICI. I mean, I wasn't sure because I thought I had taken a screenshot, but this is a report. I think for the previous year, if you look at it over here, this was the index, right? So what you see on your screen is, let's say, GRI Disclosure 303 speaks about water and effluents, which is then broken down into, let's say, the subtopics or the topic standards that they are supposed to actually talk about. It then aligns and says that how this reconciles with the BRSR report, and in what page have they actually referred this to. So if you look at it, ICICI Bank, I'm sure, because they are a global uh, giant of, I wouldn't say global giant, but then there are, let's say, other competition or larger banks, or larger institutional investors who are looking at, let's say, ICICI Bank and seeing that, what is that they are doing. They won't understand what is a BRSR because it's very regional specific, right? But the moment you talk about, let's say, GRI, immediately it'll strike a chord. It'll ring a bell saying that, no, man, okay, fine, this is what they're actually speaking about. And I think not more than 3 or 4 pages, they have very beautifully reconciled this, given page number references, and said that, how it is getting disclosed and how are they comprehensively adopting both BRSR because it is regionally required, and how they have also voluntarily disclosed from a GRI perspective. Because remember, GRI is very voluntary. Till date, there is no mandate or a mandatory, let's say, regulation saying that you will have to adopt GRI, unlike BRSR, right? So large organizations, a lot of our, let's say, big companies and large enterprises have started this dual reporting of sorts, where they have started actually publishing reports aligning with BRSR as well as GRI, and most of them are resorting to GRI. That should give you a lot of confidence and impetus for the fact that it's a globally accepted, renowned framework, right? Because again, a lot of people do come to us and say that, why should I adopt GRI? Why not TCFD? Why not something else, right? But GRI is a little more comprehensive. It covers quite a few aspects on the environment, social, and governance side of things. Like CDP, for example, I don't know if you remember that particular slide, which is Carbon Disclosure Project. Very specifically, is nuanced towards the environment side of things. It doesn't necessarily speak a lot about social. It doesn't necessarily speak about the governance side of things. The closest framework then is CSRD, but which is very specific to the way European regulations basically work. CSRD is now getting a mandated, just like how BRSR is a mandate here. CSRD is getting, let's say, a mandated, let's say, regulation back in the EU scheme of things. Yeah. So I urge you to go back and actually take a look at these reports. As I said, you should probably take a look at. Let me see if I have. Yeah, Tata Steel is the other one. I think Mahindra is the other one, and I think even Vedanta. You should actually take a look at it. And this is a very beautifully published, let's say, input that they have actually given, where they have integrated GRI and BRSR, and they have also claimed reduction of scope 1 and scope 2 emissions by 18%. Um, I hope you all understand what is scope 1 and scope 2. If not, just wait till we end the session. The last slide I have, where I'll end with a trivia about what scope 1 and scope 2 is all about. Some of you might be understanding this. Please bear with me on that. But for the others who don't understand, and this is the first time that you're looking at something like this, I'll quickly elucidate what exactly scope 1 and scope 2 emission is actually all about. I thought it was pertinent for us to also speak about how do you go about your sustainability journey? Because by now, what we have seen is, I think by now, in the last 19 odd minutes or so, we have covered what is ESG. We understood the sustainability, or let's say the nexus between ESG and sustainability. Uh, we understood the principles, that constitute of, how, let's say, you go about, let's say, ESG, and which sort of persona, like the C-suite leadership, how does it impact to which particular individual, and it typically is a C-suite problem. We also understood what, let's say, frameworks are actually all about. How do they contribute? How do they ensure transparency? How do they also give you a certain guideline, or let's say a roadmap ahead in terms of how do you go about your ESG reporting per se? We also touched upon, let's say, wow, GRI, what GRI constitutes of. GRI constitutes of universal standards, sector standards. If there is a specific sector listed, pick up that particular sector, and that will in turn will guide you in terms of how you are supposed to report in your final report about the topic standard which is applicable for you. Some of the nuances that you have to understand is that if some of the topic is not applicable for you, you can say it is not applicable, but the onus is on the organization to elaborate and say why it is not applicable. Yeah. Now, once you give that logical explanation, the auditors are going to, let's say, accept it. If there is no, if there is an omission without giving a logical reasoning, it will not be an acceptable, let's say, disclosure in that case, right? Then we saw some of the case studies, or let's say, no, I mean, how let's say BRSR aligns in the Indian context, and we also saw briefly how let's say an ICSA report very beautifully aligns with ESG, let's say in the context of GRI as well as BRSR today, right? So I know there are quite a few things that we actually covered, but I hope it all made sense for all of you. We also keep getting questions saying that, fine, we now understand everything, but how does a typical sustainability journey looks like from a organizational perspective, right? Now, the very first thing that any organization needs to actually get into is, when an organization comes to us today, like, we are in this particular space, right? So we engage with them in some let's say consulting engagement for a brief period and try to understand what sort of maturity that they have as an organization, right? Because a lot of these leadership teams, they come to us and say that we want to let's say do our ESG reporting, and most of it is either it is compliance driven or because it's a competitive push, and very few cases where voluntarily they want to actually do it. Like, we have a customer who is affiliated with the rural artisans, very small, let's say enterprise, but it's run by a female entrepreneur. And she came to us and said that, we want to actually, do, let's say, embark on this ESG journey. And I said that, why do you want to do this? I mean, she was very clear because at some point of time, I'm going to go to investors, right? I don't want the investors to then tell me that, you've not really done anything from an ESG context, because my work involves a lot with to do with the social side of things, with the people side of things, and this is very typically, let's say, the rural artisans, with whom she is working. So we thought, I mean, it was a great cause. So there are some exceptions like that, but otherwise, typically what we do is we engage into what we call as a maturity assessment phase. A maturity assessment is basically understanding what sort of, let's say, material topics the organization wants to go behind. We guide them in terms of how mature they are, or get them up to speed in terms of, let's say, what we did in today's session, for example, right? We do something like this, of course, over a period of, let's say, a few days, because today what we did, if you ask me, I try to, pack quite a few things, and I understand it might be a lot more technical to understand, but please bear with me. We'll also share the slides with you. Maybe at that stage, you will have some more clarity in terms of, what we spoke about. We identify, let's say, the stakeholders, identify, what are the material issues. At this stage, we also conduct what we call as the materiality assessment, uh, sending out questionnaires, taking the responses, giving weightages to the topics, publishing those topics internally, aligning and saying that, we go behind X, Y, Z topics for this particular period, then start, collating all that particular data. Once we conduct a materiality assessment and have this particular review done, we then would have identified what is our ESG priorities. As I told you earlier, it depends on what period of, let's say, review or what period of reporting we are talking about. In some of the cases, it might be monthly. In some of the cases, it is quarterly. Today, from a BRSR perspective, if you look at it, most of the companies who are doing it, it might be on a quarterly basis, right? Because they have to publish, let's say, in the open space, right? Do they have an ESG strategy or a framework in place? If not, we guide them. Have you identified what are the ESG success factors? Because very pertinent, right? Why do you want to, let's say, embark on this particular journey is a big question. Because by now you would have understood this is unfortunately or fortunately a top driven uh, let's say, strategy. Although it has a huge set of inclusivity, but the ownership and the accountability or the responsibility lies with the senior leadership teams of an organization. How have you defined the roadmap for ESG integration? I'm sorry. Um, Once you actually and do this particular bit, there you need to transparently report it as well. You can't just file this ESG report and say that, I'm going to keep it within my office, let's say records and drawers. You will have to publish it in the website. Do you disclose your ESG commitments on your website? Do you publish your annual sustainability reports to your stakeholders? Finally, uh, once, let's say, all of this is done in a GRI context, typically what happens is, the GRI, if you adopt it, the GRI reports need to go to GRI as well. In random cases, we are informed that that gets picked up for review and for some inputs, and let's say some of the feedback from their side. But otherwise, if you do it, there is a an email ID where once the report is ready, it needs to go to them, and the companies are then they can actually be free to actually file it in their let's say website, and that be made available to every common man, woman who wants to access that from a reporting perspective. From a implementation methodology perspective, I think I'll just summarize. What you saw on the earlier screen was more of the strategy adoption and what you do with the report eventually, because you compile the report and put it up on your website, right? But that is on a continuous basis from a strategy perspective. Now, this, if you have a verticalized approach in terms of how do you implement it, one is you define your team, identify who's going to do what, have a stakeholder engagement of sorts, conduct the materiality assessment, have the data collection in place. Because once, let's say, the materiality assessment gives you a direction that I want to reduce my carbon footprint by 50%. That's a bold statement. That's a great statement. But what are you going to do to achieve that? Becomes an even bigger question over there, right? So how do you conduct a materiality assessment? The process itself needs to be a derivative of how GRI guides you to conduct a materiality assessment. Because if you adopt a GRI based reporting but not follow what it says, again, you're probably looking at a probable qualification over there, right? Then comes the data collection process. This is the biggest challenge every organization faces. Every organization wants to start it, but at some point of time, the hurdle comes in saying that, ye data aayega kahan se? Where would we get data from? Some of the matured organizations are quickly responsive to it, saying that let us probably create placeholders, or let's say invest in automation softwares and other stuff. Some of the organizations are a little lackadaisical in their approach and say that dekhte hain, we'll see kal kya hoga dekha jayega, but they're only procrastinating their problem. And always remember, one of the principles of let's say ESG reporting was continuity, right? Long term perspective. If you start something this year, you'll have to keep getting better over it over a period of time. Like I would like to give you an example of what is happening in EU right now. A lot of companies, I think in the last quarter, they actually went to EU and they said that we'll not be able to, let's say, take up ESG reporting because we are simply not ready. Uh, we just don't have the bandwidth to let's say start reporting in line with, let's say, CSRD or GRI framework. So I think the bodies over there heard them. Now, what was supposed to happen from 1st of January 2025, where the reporting was supposed to start, they have been given a leeway by let's pushing it by another year or so, right? But I'm pretty sure that they got only this year. No, and ideally, if somebody has to report from 1st of Jan 2026, the time is now that they'll have to start their ESG reporting per se, right? So this is happening, and data collection is the biggest problem at this stage. Then, of course, the GRI report development, as I told you, GRI gives you a guideline, gives you a disclosure in terms of how you are supposed to give out your report. Simply put, it is just a disclosure of, let's say, every element of data that you have captured. You say, let's say, GRI 201, under that, what is that you're reporting? And start reporting that particular bit and say that, this is how you collected the information. Review and assurance. Again, this is actually important. And I believe some of you might be representing audit firms which would want to, get on the assurance audit side of things as well. Lastly, you then publish this particular report, and by making it public, you are also sending out a messaging that you're transparently, honestly reporting what is expected out of you as an organization, right? So this, in a nutshell, is how you go about, let's say, a GRI adoption or a GRI implementation of sorts. Yeah. We also get questions saying that, how do you, let's say, leverage technology from a GRI reporting perspective? Now, I can give you jargons, but honestly speaking, what you see on the screen again is a little jargonish.
But very simply put, today the biggest challenge that we are actually facing is collection of data. Where is the data going to reside? Very simply put, I gave you an example of, let's say, water management, right? Today, do you really think that the amount of water even your staff which is consuming, are you really capturing it somewhere? The answer is no. It is only there in your, let's say, invoice bills that you're paying to your water suppliers, correct? And is your water consumption only that? The answer is no. There is always this sanitary usage as well, right? Do you have the data for that? The answer is no. uh, do you not waste water in one way or the other? Of course you do. Any organization which says, even if they are not into manufacturing, probably they are just probably trying to brush it under the carpet. Correct. So today data is becoming the biggest problem. When I say data, not data in itself, but where do you really hold this particular data? Do you hold this in, let's say, an ERP or in a Tally? The answer is no, right? Do you hold, let's say, if I tell you about anything to do with inclusivity, will you be holding it in HR software? Partly yes, partly no. If there is something else, then where does this data basically reside? Like the travel example that I gave you. If I'm traveling overseas, all you probably get is, let's say, my cab fare and, let's say, my air tickets and my accommodation details, right? Today there are a lot of organizations who are very particular ensuring their employees travel only by airlines which very clearly give out the data or are publishing that they are emitting, let's say, lesser carbon emissions. Yeah, I'm not sure how many of you have really seen, if you go to, let's say, Make My Trip or any of let's say airline portals today, when you book the tickets, there is a small line at the end of it which says very clearly that this airline emits 10% less carbon dioxide. I don't know if you have seen that. Many of the airlines have actually started actually doing that, right? So this is becoming a huge challenge. So automated data collection problem, centralized data management, storage is a problem. Real-time dashboards. Everybody wants dashboards, but at the end of it, डेटा आएगा कहाँ से? अगर डेटा नहीं, it is like saying that मेरे को artificial intelligence चाहिए. But if you want artificial intelligence, for that your data needs to be in order, right? Cloud-based reporting, enhanced adoption of new age technologies. These are problems, and these are also, let's say, solutions for how you enhance or leverage your technology, let's say, available at your disposal from a GRI reporting perspective, right? Uh, I think this should be familiar by now, this particular slide, but there's also, I'll quickly run through in the interest, we have some time. So this basically aligns, this tells you that, how GRI aligns with most of, let's say, the global frameworks. I think we discussed in detail how it aligns with BRSR. Now, I told you that, if you have to, let's say, resort to sustainability certification from a GRI perspective, there is a whole module, where they have aligned the GRI nuances to how it aligns or how it integrates with, let's say, the UN SDGs, right? Which is very important because, in my opinion, if you ask any sustainability professional, they'll say that the UN SDG are a big driving factor today for organizations to pick up on ESG as a subject. Similarly, TCFD very clearly lays out saying that how, let's say, that the alignment basically works. CSRD, IFRS, SASB, CDP, so all of these are well aligned, and I think in the coming year or so, or sometime during the course of the year, you will start seeing dual certifications, which is actually going to be a reality, which will also help, let's say, people like us to guide or consult our customers in a better perspective. Because today we keep getting thrown this question saying that if there are 600 frameworks available, why should I, let's say, adopt only GRI? Why can't I adopt something else? Today we are in a position to answer it, but I think in some of the organizational cases, you might have to, let's say, resort to let's say 2 or 3 frameworks also, because one, I mean, the whole purpose might be different. One might be investor focus, which is global in nature, in which case GRI comes into the picture. One is, let's say, regional, which is, let's say, BRSR, if it is an Indian entity. Third is, let's say, if it is very high impact industry like a mining, or let's say polluting the environment, for example, then something like a CDP becomes very prevalent, right? So there are a lot of these nuances which is still getting answered. You will have to see how this basically works. And I think when you go through this particular slide at the, I mean, whenever ICAI shares it with you, you can go through this in a little more detail and probably have a deeper understanding of how it basically aligns. Although this wasn't required in today's session, but I thought it is important for you to understand, because it is always good to understand a little more better than what the subject itself is all about. I'm sure all of you would appreciate the fact that there always needs to be value in terms of the what takeaways are in sessions like this. One of the key aspects of, let's say, GRI and its, let's say, alignment with SDG is what you see on the screen is the complete set of 17 sustainable development goals. Like today, not all 17 goals will be applicable for every organization, but the organizations can pick and choose and say that, let's say, for us, let's say no poverty, it doesn't impact us, but maybe it is a CSR initiative for us. Maybe once we, let's say, when cross a certain threshold, we are going to serve a certain community or an NGO in the form of, cash or kind or, whatever it is, right? So similarly, if you look at, let's say, the key addressables over here, SDG number 6, from a clean water and a sanitation perspective, the reporting on water and usage management very well aligns with, how the UN SDG itself speaks about and how GRI talks about. So in which case, organizations don't have to do a dual reporting over here. Once they say we are actually, when aligned with GRI, there is a definite alignment with UN SDG itself. Yeah. So that is the comfort with which organizations can start doing this reporting. I think this we discussed in detail, but I think some of the key constraints that we faced in a recent project is what I had actually documented. Just to summarize, the data collection, materiality assessment, although to talk about is very easy, but it involves a lot of, let's say, deep diving of, knowing your own organization and being very transparent about it. It's like, you want to determine, what, let's say, significant sustainability topics are, but for you to put out a questionnaire and be very transparent about it and ask, let's say, your external stakeholders, like, for example, your customers or your services providers saying that, I mean, honestly, tell me that, what do you think about me as an organization? It takes a lot beyond, let's say, honesty. It takes a lot beyond integrity as well. There are some challenges, where some of the organizations are not doing this actively, but it is highly recommended that, they actually resort to it. Yeah. Lastly, I think the key takeaways, I think for all of you from this particular session, is what I thought I'll probably quickly summarize. One is understanding the GRI framework, the alignment with BRSR, the integration into the business strategy. Now, if you look at some of the, I mean, I don't want to call those companies, but there are quite a few companies who are publishing the ESG reports, where you can clearly see that, the reality is far from what, let's say, their report speaks about, which means, they're not walking the talk. And today I feel the 20 and the 30 somethings today are a smarter generation than, let's say, our generation today, right? They are more informed, they know what exactly they're looking at, and there is a great clarity of thought. If they see through and say that, this is not something the organization is really doing, or they're actually greenwashing, it might be again a staircase versus the elevator pitch, where, the whole reputation actually will take a downfall of sorts. GRI ensures there is a huge stakeholder trust internally as well as externally. There is a big impetus on, let's say, technology adoption. Without technology adoption, without data being in place, without your data pipelines, adequately supporting your ESG journey, it's a far cry, because, I don't think you can realistically achieve ESG reporting in that particular perspective. Many of the, let's say, Indian leaders like, Tata Steel, Mahindra, ICICI Bank have very effectively integrated, their thought process around, let's say, ESG reporting, aligning with BRSR as well as GRI. I think you should probably learn from it. When you look at, let's say, practical reports, you will understand this in a little deeper. For me, it would have been very easy to just publish a lame report and tell you that, I mean, this is how GRI report looks like, but I wouldn't do that. I would urge you as a takeaway, please go back to all these portals. The reports are available for you to take a look at it. Go through the report. Please take the pain of reading the entire report. You will understand this session in a deeper perspective, because, all those universal standards, sector standards, and topic standards that we spoke about will have a practical relevance in those reports and the reporting guidelines that you would see over there. Finally, I think the role for sustainability reporting is actually expanding as we see at this point of time. And there is a pie for everybody. Some of you might be looking at, let's say sustainability as a full-time profession. The next 5-10 years are going to be really exciting. Globally, it is really picking up steam, except for US, unfortunately. But I believe at some point of time, because of the cyclical nature, US also will fall in line. It's like if I give you an example, if there is a global MNC based in Europe, Middle East, India, as well as US, just imagine at some point of time, ESG consolidation is going to be a reality. So if 5 or 6 of your, let's say, countries are actually consolidating, but one country says that, because we are not regionally required to do it, the organization is not going to be quiet about it, right? They will definitely push and say that, it's a mandate. You will have to take it up. And I feel that, that is going to be a reality in the next 2 to 3 years for countries who still haven't adopted, let's say, ESG from a practice point of view. Having said that, the audit assurance is again becoming a big scheme of things. We are given to understand that when the MCA as well as in fact the MEA, the MCA as well as SEBI, they are working towards penalizing companies who are resorting to greenwashing. And again, what is greenwashing? It is misreporting, half reporting, and not reporting, right? So there is a pie for all of us, and it's a great space to be in. It is not just about let's say compliance. It is not just about ticking that it is right, it is wrong, but it has got a data nexus, correct? And where there is a data nexus, there's going to be adoption, there's going to be technological implications as well. For somebody, who wants to adopt or marry the domain versus technology, I think it's a great space to be in. And I firmly believe that, the times ahead are absolutely exciting. Um, I'll quickly wind up with this particular trivia for the uninitiated people who don't or probably have looked at this particular slide for the first time or the terminologies for the first time. When we speak about, let's say, carbon emissions today, they're broadly categorized into 3 categories as you see on the screen. It is called a scope 1, scope 2, and scope 3. Yeah. So in an ESG context, anybody who speaks about scope 1 from a sustainability point of view, uh, imagine a manufacturing, let's say a company which is into manufacturing. Now this particular company will obviously let's say uh, probably when buy gas, buy fuel, and there's going to be a lot of emissions which where their own processes are directly contributing to the emissions, correct? So those companies are actually called as scope 1. Any indirect emissions like buying electricity which is contributing to their process, correct? Buying electricity, heat, buying cooling, coolants, buying streams and other stuff, which has got an indirect implication of sorts, is categorized as scope 2. Anything which doesn't fall under these two purview becomes scope 3 emission of sorts. And scope 3, the simplest example I keep giving to all of them is the business travel, as you see over here. The examples that I gave you, like in my case, right? If my organization wants to report and take a ESG view of my business travel, they are dependent on, let's say, the airline to give out the data, which means the organization themselves are not in control of that particular data, correct? So the organization needs to then depend on whether the airline is giving you the right set of data or not. So today, going back to that example of you going to the portal and trying to see uh, the last line saying that this airline emits 10% lesser, let's say, emission, correct? Now, is that a right statement or not? We don't know today, right? But anyways, the emissions which is not covered in scope 1 and scope 2 is classified as scope 3, and that is completely indirect. So the organization which burns is actually scope 1. The organization which buys, which is indirect, is actually scope 2. And anything which is beyond the control of the organization from a data perspective is scope 3. Yeah. With that, I think I'm just on time. Thank you so much for the session. I know, you probably had a very patient listening to it. I hope it made sense for all of you. Thank you so much. Again, some of the jargons, but maybe I'll cover this after some Q&A that we have.
Thank you so much, sir. Now I will request Amit Doshi, sir, please, you can carry forward with the questions.
Thank you very much, sir. First of all, my gratitude to you for sharing your thoughts on not only on GRI standards but comparison with other standards as well. The frameworks which you covered were excellent, and the scope that you expanded from GRI to other standards were of great utility for all of us. There are quite a few questions
Thank you.
raised. Yeah. There are quite a few questions raised, but post raising those questions, those have been covered by your slides and your talk. So, due to paucity of time, I'll not take up all the questions.
Okay, sure.
But with few questions which are of largely of great importance and which are not otherwise covered would be taken up.
Sure.
So I'll read the first question.
Right.
That is, on which entity GRI are applicable?
Which entities you're saying? Is it?
Entities, yeah, though you have covered under the slide,
Right.
but more clarity is required on this.
Right. When you say entity, see today, something like a GRI is actually industry and entity agnostic, right? Any company who wants to, let's say, adopt ESG reporting today, they are free to actually resort to let's say GRI framework. And today, as I told you, there are about 4 to 5 sector-based, let's say, reporting guidelines, which is readily available. Even if, let's say, if your sector is not listed out in the GRI scheme of things, you are free to still use the other, let's say, standards or other guidelines, that is available in the GRI framework of things. So, to cut it short, there is no single entity or there is no single industry which specifically needs to cover GRI. GRI can be applicable for any entity for any industry. It is still evolving, and as I said, at some point of time, you will find the entire 40 sectors or 40 different sort of industries getting covered into the GRI framework of things. And what sort of companies need to, let's say, adopt ESG reporting might be a better question. Now, as I said, one, it is, let's say, if you talk about India, obviously, the mandate is very clear. The top 1,000 companies have to actually adopt it. The second category of companies are, let's say, companies who see the other competitor doing it, but, they don't want to be, left behind. So they are also adopting, let's say, ESG reporting. And the last category is, let's say somebody, who wants to do it voluntarily, like ONGC, for example. They had no business to take this up, let's say 20 years back, but they still did it. So I hope that answers the question over here. Yeah.
Okay, good. So in short, it is voluntary for companies to adopt these frameworks, right?
Correct. That's right. Yeah.
Okay, great. So the next question would be, how can we simplify complex sustainability concepts and terminology to facilitate better understanding and engagement? Few
There's
ways,
no,
you
yeah.
know.
There is no definite answer to this, sir, but I think we'll have to keep learning and we'll have to keep educating, right? As I said that, one is, let's say, reading and then taking up uh, academia, taking up, let's say, sessions like these, spreading the awareness is the only way out. Because, unfortunately, today also, if you look at it, it's very jargon based. People who still speak about ESG and sustainability are just throwing jargons at each other without really delving deeper into, what exactly it actually means. So I think we'll have to learn. The onus is on all of us over here in this particular session because we're all, let's say, professionals. Now we need to understand, absorb, have the right, let's say, thought process, and then, keep on educating, let's say, the customers, our peers, our contemporaries and colleagues, and everybody, who is wanting to get into the ESG bandwagon. I hope that
And
made sense.
that is why we have this kind of session we have started, and this is a
Totally
webinar
appreciate.
every Thursday we are planning to have, and
Nice.
I'm happy that this kind of awareness on sustainability is actually being spread, and we being at institute being the first one to have our sustainability board across world and getting the best sustainability board award also from UN United Nations. So
Brilliant.
I'm sure with this webinar series, certificate course, awareness, we'll do
Yeah.
the best. And Kaushik Bhai, you are always there in certificate course also as a faculty. And here,
Come
and Amit
anytime.
Bhai
Yeah.
being there as a member of the this board also. And in our awards, we have the best sustainability report awards also, where we put a
Correct.
lot of efforts. More than 100 companies also participate into these awards.
Correct.
So, and the SEBI bringing various regulations and the value chain, the awareness will automatically created when the things are also becoming mandatory to be followed
Correct.
by the companies and the corporates. And
Correct.
awareness is being created by institute. So I'm happy that you have taken this up session at very short notice. But however, now onwards, Amit Bhai, we have to ensure that we actually bring this in advance, announce this kind of webinars every week. But mark your calendars, everyone. I request you, all of you, to mark your calendar on every Thursday. We will be here 4 to 6 on this sustainability. And this is a
That's
very
impressive.
good area of practice for our members also. And today only I have visited SEBI, and we are trying to connect, say, regulators to ensure that our members get the benefit out of it. Yeah.
Excellent. That's a fabulous initiative. Thank you so much.
Thank you, ma'am. I would have liked to introduce you before you jumped into the bandwagon. Anyways, I would still love to do it. Welcome on the board right now on this webinar. And I have a couple of questions left. Can I finish it and then we can listen to your
No, please carry on. I have already spoken what I wanted to speak, taking time out of your schedule. And you please carry on with the questions now.
Thank you. Thank you. Okay, next question, Kaushik ji, for you is that
Hanji.
how can we use GRI reporting to demonstrate our contribution to the UN Sustainability Development Goals?
Great question, sir. Now, as I said, the good thing about GRI reporting is there is a full-blown, let's say, guideline. There is a full-blown module which very clearly says how the GRI guidelines are well aligned with what, let's say, the UN SDG guidelines actually speak about, right? So once we are able to adopt that and pick it up in our, let's say, decision-making process and reporting process, I think it becomes very easy from an organizational context point of view. If you, I mean, maybe we can actually do a session on that particular bit specifically, because there is a lots to speak about, in that particular area itself. And quite a few organizations are very keen on doing that, because the moment you speak about UN SDG, half of your, let's say, ESG initiatives are actually taken care of over there itself. And thankfully, GRI is one of the earliest frameworks or the leading framework which aligns well, line by line, item by item, saying that, how, let's say, the UN SDG goals can be adopted, integrated with the ESG reporting guideline of the GRI framework. Yeah.
I'll take up last question. I know we are running out of time, but there is one important question.
Please.
That is it necessary that GRI reporting certification to be obtained from GRI organization, or
Perhaps.
it would be okay if the certification is obtained from an Indian-based organization, some other organization?
Not really. Not really. You will have to take up if you are a GRI certified professional, you will have to go to GRI and get the certification done. No other, you might have training institutes over here which might be helping you to go through the training, but the eventual certification is issued by GRI. So there is no other body who is authorized to give you the certification.
So how to get that authorization to give this GRI certification?
Right, ma'am. So, it's a very simple process. If you just go to their portal, so there is this certification course called as GRI Certified Professional. So I think they've got a course content for close to about 20 hours, which is very technical in nature. In my opinion, anybody who's starting today, for example, with about 2 or 3 readings and some revision might take about, let's say, 2 to 3 months. I'm assuming that, somebody who comes to that particular stage understands ESG really well, because without understanding ESG, if you straight away jump to getting into getting the certification, it might be very tough. And it's a very, very technical course. Everything is online. The content is provided. It's a video-driven content. There's a lot of, let's say, written material also available. If you go to their website, the whole PDF file is available where you can actually, use it as a study material, go through the videos, and when you're ready for the exam, follow the guideline, which GRI gives you, take it online and get certified. But the pass percentage is 80%. And as I said, it is a little technical. So even before you get into, let's say, GRI certification, it will be important for you to understand the concepts of what ESG reporting is all about, which is why I covered quite a bit today. I know that, I covered about, 45 minutes of stuff which is not related to GRI, but I thought there are quite a few people, who are new to this particular subject itself, right? So if they don't understand this and straight away get into the certification, it might be a challenge
for them. I hope that answers your question.
How many companies in India are actually getting this GRI certification done?
It is not companies, ma'am. So there are two sorts of certifications which is available. One is you as an individual can get certified. So in let's say my case, I'm today a GRI certified
No.
professional.
My question is that how many
yeah.
corporates are required to do? Matlab, are actually like BRSR is being done by top 1,000 listed companies. So how many
It
corporates
is not a no. It is not a mandate at all. GRI is a voluntary disclosure framework. You are free to adopt GRI if that is your question. Yeah. So like today, ICICI had no business taking up GRI, but they are picking up GRI because it is a globally adopted framework which everybody speaks about. It's a widely accepted framework, internationally reputed, and it is becoming very popular. That's how it is. But GRI themselves have not made it as a mandate anywhere. It is not a mandatory framework at all, unlike BRSR. Yeah. Does that answer, or have I confused you?
No. Got it.
Okay.
I think it is clear, and from my side, as far as questions are concerned, it is over. Over to committee room.
Thank you so much, sir. So on behalf of the entire team, I want to thank each and every one of you for joining us today. Your active participation and insightful questions made this session truly valuable. Our esteemed speakers provided a wealth of the knowledge and GRI. Their perspective has surely helped in enhancing our understanding of sustainability disclosure and the best reporting practices. As the landscape of sustainability reporting continues to evolve, we remain committed to supporting the professionals like you in understanding the globally recognized framework. Stay connected with us, as ma'am have already said that every Thursday we will be here doing some sessions on the webinar related to sustainability and resources on sustainability reporting. Once again, thank you for being a part of today's session. We look forward connecting with you in the future webinars. Thank you everyone and have a great day.
Thank you. Appreciate this.